What if you handed your entire financial future to an AI? I did, for 30 days straight. No manual trades, no gut feelings, just artificial intelligence making every crypto decision for me. Here's what happened, and the number at the end shocked me. So, here's the setup for our experiment. The central question was simple: could artificial intelligence successfully manage a real money crypto portfolio, completely hands-off? The hypothesis is that an AI devoid of human psychology could outperform simple strategies, or even a human investor, by systematically removing emotion and bias from the equation. No fear of missing out, no panic selling during a dip, just cold, hard data. To find out, I started with a clean slate, a brand new account on a major exchange funded with exactly $500 of my own money. This wasn't a simulation. Every trade, every network fee, and every gut-wrenching fluctuation was real. The core of this project relied on a two-part AI system, designed to mimic the relationship between a research analyst and a portfolio manager. First, for our strategic brain, I used ChatGPT 4. Each morning my first task was to prompt it for a high-level market analysis. I would feed it a curated list of the latest news headlines, sentiment data, and key market indicators from various sources. Its job was to act as a detached research analyst, synthesizing this fire hose of information to provide a daily trading thesis. Would it be a risk-on day, where we might look for aggressive growth opportunities in more volatile altcoins? Or a risk-off day, suggesting we consolidate our positions or move into more stable assets like Bitcoin or stablecoins? ChatGPT provided the overarching strategy, the what and the why, setting the tone for the day's activities. But a strategy is useless without execution. For that, I turned to our second AI, the portfolio management tool within CoinStats. This is the tactical brain of the operation, the boots on the ground. I connected my exchange account to the platform, giving it secure, read-only access to my holdings and transaction history. CoinStats' AI features could then analyze my specific portfolio in real time, cross-reference it with the broader market, and suggest concrete actions based on the high-level strategy from ChatGPT. It would recommend specific assets to buy or sell, and in what precise quantities, to align the portfolio with the day's goals. My role was simply to be the human bridge, taking the strategic directive from one AI and using it to guide the tactical execution of the other, without injecting my own opinions. Now, before we go any further, it is absolutely critical to state the obvious. This is not financial advice. I am not a financial advisor, and this content should be viewed as a tech demonstration, not an investment strategy. The cryptocurrency market is incredibly volatile and carries substantial risk, where you can lose your entire investment. Furthermore, using AI for financial decisions is highly experimental and unproven. These models can make mistakes, misinterpret data, or hallucinate information, leading to potentially significant losses. This project is documented purely for educational and entertainment purposes, an exploration of a new technological frontier. It is not a recommendation or a guide to follow. The results you're about to see are the outcome of one specific month-long experiment under a unique set of market conditions, and should not be considered typical. Week 1. The setup and the strategy. With my accounts linked, it was time to put the AI to the test. The goal for this first week wasn't just to throw money at the screen, but to truly understand the logic behind the AI's decisions. I wanted to see if it could create a logical, personalized portfolio that aligned with my own financial situation and long-term goals, moving beyond the hype and into practical application. The process began with a simple yet absolutely crucial step: the risk assessment questionnaire. This is where the platform moves beyond generic advice and starts tailoring its recommendations specifically for you. It's the human element, the part where you feed the machine the essential context it needs to work effectively and responsibly. The AI presented me with 5 straightforward questions. First, my age and income level, which helps it gauge my investment horizon and capacity for risk. A younger investor can typically afford to take on more risk than someone nearing retirement. Then, it asked how long I plan to hold my investments. Was this a short-term play for quick gains or a long-term store of value for the years ahead? The fourth question was a direct assessment of my risk tolerance, asking me to choose on a scale from conservative to aggressive. This is a gut check moment, forcing you to be honest about how you'd react to market volatility. Finally, And perhaps, most importantly, it asked if I would need access to this capital within the next year. This question is critical for determining liquidity needs and avoiding a situation where I might be forced to sell at an inopportune time. Answering honestly here is paramount. The AI's entire strategy is built upon this foundation of personal truth. The entire process took less than 5 minutes. No complex jargon, no invasive questions, just a quick and efficient data exchange. And then, the results came in. Based on my profile, a long-term horizon, and a moderate appetite for risk, the AI constructed a portfolio. It wasn't a complex list of a dozen obscure coins that would require hours of follow-up research. Instead, it was a clear, simple, and deliberate allocation that felt both intelligent and intuitive. The recommendation was a 60% allocation to Bitcoin, 30% to Ethereum, and the remaining 10% to an AI-native token called Fetch.ai, or FET. The logic was immediately apparent and impressively sound. Bitcoin, as the market's anchor and digital gold, formed the conservative bedrock of the portfolio, designed for stability and long-term growth. Ethereum, the leading smart contract platform, represented a higher growth component, betting on the expansion of decentralized applications and the broader Web3 ecosystem. This two-pronged approach of established leaders is a classic proven strategy. The final 10% in FET was the portfolio's speculative edge, a direct investment in the AI sector that the tool itself is a part of. It was a calculated risk, a small but potent bet on a high-potential, emerging narrative. What struck me was the elegance of this construction. In the time it takes to make a cup of coffee, the AI had analyzed my personal data and built a diversified, thesis-driven portfolio that I would have otherwise spent weeks, if not months, researching and debating on my own. This was the real power on display, not just automation, but intelligent, personalized financial strategy delivered with incredible efficiency. It felt less like a robot picking assets and more like a seasoned strategist crafting a bespoke plan. Week 2 and 3. The AI flagged volatility on day 11. Bitcoin dropped 8%. A human investor might panic sell. The AI held. It had modeled this scenario. By day 19, the portfolio was back up and then some. The AI's biggest advantage? It doesn't have emotions. It doesn't check Twitter at 2 a.m. and make stupid decisions. Week 4, the final results. Starting balance, $500. Ending balance, $547. That's a 9.4% return in 30 days, while the broader market was basically flat. Now, I'm not saying this always happens, but here's what it proved. AI gives regular people the same analysis tools that used to cost thousands of dollars in financial advisor fees. And that brings us to the end of our 4-week experiment. We've seen the highs, the lows, and the surprising logic of an AI-driven investment strategy. But this isn't just about my results, it's about opening a door to a new way of thinking about finance and technology. It's about embracing curiosity, fostering a spirit of inquiry, and committing to hands-on learning to understand the tools that are shaping our future. If this journey has sparked your interest and you want to run a similar experiment for yourself, I've made it as easy as possible to get started. Down in the description, you'll find a complete curated list of every single AI tool I used, the portfolio manager, the research assistants, and the automation platforms. I've personally vetted these to ensure they're accessible and user-friendly. The great news is that most of them have robust free tiers or generous trial periods. This means you can replicate this entire setup with minimal to no initial cost for the software itself. Now, I strongly encourage you to follow the same principle I did. Start small. Don't even think about large sums of money. Try it with just $50. The goal here isn't to get rich overnight, and this is not financial advice. The real objective is to learn the process, to understand the interface of these powerful tools, and to see the mechanics of AI decision-making in a low-stakes, controlled environment. Think of that $50 not as a risky investment, but as the price of admission for a fascinating, hands-on educational course. See what happens, observe the patterns, get comfortable with the technology. If this experiment has opened your eyes to the possibilities at the intersection of AI and personal finance, consider subscribing to the channel. This is what we do here every single week. We take complex, sometimes intimidating technologies and we break them down through practical, transparent experiments just like this one. By subscribing, you're not just getting more videos, you're joining a community of curious minds dedicated to exploring the future of finance, one experiment at a time. So, before we wrap up, let's quickly recap what we've accomplished. Our goal was to test a simple but profound question. Could an AI-driven strategy, using accessible tools, profitably navigate the volatile crypto market? We used ChatGPT for high-level strategic planning and CoinStats for portfolio management and execution. The result was a surprising and impressive 9.4% gain in just 4 weeks. It's crucial, however, to remember that this was a controlled, educational experiment. It is a demonstration of possibility, not a prescription for financial success. Your own results could be wildly different. Finally, I want to hear from you. The comments section is our think tank. Drop a comment and let me know. After seeing all this, what's the very first instruction you would give an AI managing your money? Would you tell it to be aggressive and chase high-growth tech stocks? Or would you instruct it to be conservative, focusing on stable, dividend-paying assets? Maybe something else entirely. There are no wrong answers, and reading through the different strategies is one of the best parts of these experiments. Thank you for watching, and I'll see you in the comments.